Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. So over the past week, gold kept hitting new highs, pushing towards $2,600 as the market got really excited about a potential 50 basis point rate cut from the Fed in September. Today's U.S. retail sales and tomorrow's FOMC meeting are closely watched as the size of the first Fed rate cut could significantly impact gold prices. So in today's video, after going through, the technical analysis and the reasons behind the recent moves, I'll focus on how these two big events might affect gold trading. So let's dive in. Looking at the gold against US dollar daily chart, that Thursday's breakout above $25.30, the top of the recent range since August 19, was absolutely a standout moment. The price jumped 1.9% that day and then continued to rise, hitting a new high at $25.90. Today, we're seeing some bearish signals with prices around $25.80. If gold keeps climbing, $2,600 will be the key level to watch, while on the flip side, if bears take over, the $25.30 and $24.80 levels from the past month will be crucial for adjusting positions. Well, actually, many were puzzled by the sudden surge in gold prices last Thursday. There weren't any major changes in the fundamentals, so why the big move? Well, I think it's because gold had been consolidating around $25-30 for a while, leading to huge volume and accumulation there. Initially, the price spike might have been due to stop-loss orders being triggered, followed by momentum traders jumping in, driving prices even higher. So to me, that sharp rise was all about, changes in fund flows. Well, from Friday to today, the price action seems to be more about the market recalibrating expectations for the Fed's September rate cut. With August US CPI and PPI data cooling off and previous employment data being revised down consecutively, the bets on a 50 basis point cut have clearly risen. And last Friday, the chance was nearly 70%, with the 2-year US Treasury yield dropping to 3.55%, the lowest since September 2022. This lowers the opportunity cost of holding gold and supports higher prices. So overall, gold's recent uptrend is back, fueled by shifts in fund flows and increased bets on a front-loaded rate cut. The market is now almost evenly split on whether we'll see a 25 basis point or 50 basis point cut tomorrow, adding to the uncertainty. Tonight's US retail sales for August might tilt the odds. After July's 1% month-on-month increase, the market expects a 0.2% drop in August. I think negative data could boost the chance of a 50 basis point cut, which might weaken the dollar and leave gold. But keep in mind that the market reaction could be short-lived, as traders will be focused on FOMC meeting and Fed's comment later on. In my view, since a 25 basis point cut is almost priced in, gold might see a slight dip if that's all the Fed delivers, as it wouldn't meet the market's higher expectation. I'll adjust my positions based on how gold reacts around $25-30. While if we get a 50 basis point cut, gold could see a strong boost. We'd be looking at two main market reactions. First, increased fear of a US recession pushing up safe haven demand. And second, the Fed's extra stimulus leading to more risk taking and lower US Treasury yield. I would say both scenarios would likely keep gold prices climbing or at least holding steady. Well, as for whether gold can break $2,600, it really comes down to Fed's messaging, especially Powell's explanation for a 50 basis point cut. If the cut is framed as an insurance move with a reassuring message about managing the economy, gold's rise might be more moderate. But if there are hints on recession risks and faster cuts, $2,600 could easily be surpassed. So that's pretty all for this week. If you have any thoughts on how the upcoming FOMC meeting might impact gold trading, drop a comment below and let's chat about it. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!